A quick reminder here, guys, this is a dividend ETF with a well-balance between dividend yield, dividend growth rate, and capital appreciation. When we look at the graph here, compared to other low-cost indexes, the results are astounding. What's up, you guys? Joe here from the Average Joe Investor channel, where we help the average Joe out there go from being just average to becoming financially independent. Whether you're this close to retirement, you want to retire early, you're struggling with your finances, and everything in between. SCHD, the Schwab US Equity Dividend ETF, is one of the best dividend ETFs out there. We've proven this in multiple reviews, and the numbers speak for themselves. In this video, I'm going to break down for you exactly how SCHD works, why it's such a great ETF, and then we'll take the results of SCHD since it was created back in 2011. We'll compare it against the S&P 500, we'll compare it against the NASDAQ 100 ETF, and we'll compare it against the Russell 2000, just to see how this awesome dividend ETF compares against regular low-cost index funds. You guys know I never want to waste your time, and I always want to deliver massive value with every video that I make. So without further delay, let's get started. This is the dividend ETF spreadsheet. We're going to come back to this and look at all of the comprehensive data that I've compiled. But before we do that, we need to be able to understand exactly how SCHD works, what the index is comprised of, how it picks its underlying stocks, because that is fundamental to understanding why this is such a great dividend ETF. All right, some of the basics here. It's got an expense ratio, 0.06%. This is essentially a $6 fee every single year for every $10,000 you own in the ETF. It has an underlying index, which we will dive into in a second, the Dow Jones US Dividend 100 Index. We will understand exactly how that is comprised and how it picks its stocks here very soon. As of January 13th, current price per share, $82.05. The fund was created on October 20th, 2011, and it has 105 different holdings. This dividend yield right here is a little bit old. It's based on November 30th. The index has gone up in value since then. I believe the dividend yield we're going to look at is right around 2.74%. All right, guys, we're diving into the prospectus here because we need to fundamentally understand exactly how this Schwab ETF picks its underlying index. To pursue its goal, the fund generally invests in stocks that are included in the Dow Jones US Dividend 100 Index. Now, this index is designed to measure the performance of high dividend yielding stocks issued by US companies that have a record of consistently paying dividends, selected for fundamental strength relative to their peers and based on financial ratios. So a few key things to understand here. First off, excluded are real estate investment trusts. There are none in this ETF. They also don't include any master limited partnerships, no preferred stocks, and no convertibles. Now, here's how they comprise the 100 stocks in the index. They took a look at all eligible stocks that have sustained at least 10 consecutive years of dividend payments. Also have to have a minimum float adjusted market capitalization, meaning overall value of the company, of at least $500 million and meet minimum liquidity criteria. In other words, how much volume does this stock have? How often is it traded? Is there enough trading activity for the stock? They then select the highest yielding dividend stocks based on 4 fundamentals-based characteristics. They look at the cash flow to total debt, return on equity, dividend yield, and 5-year dividend growth rate. And then from there, stocks are weighted based on a modified market capitalization approach. In other words, no single stock can represent more than 4% of the index, and no single sector, as defined by the index, can represent more than 25% of the index. So no one single dividend stock can make up more than 4% of the index, and every sector must be less than 25%. So based on this approach, you can see that there's a high emphasis on quality as well as dividend growth rate. So what exactly are the holdings in this ETF? Top holdings as of January 13th, 2022 include Merck, Pfizer, Coca-Cola, Cisco Systems, Amgen, Verizon, Broadcom, PepsiCo, IBM, and BlackRock. These all represent between 3.64% and 4.2%. Now remember, no single stock is supposed to have more than 4%, but in between times that the ETF rebalances, some of the stocks are going to go up in value and some of them are going to go down in value. And so that will change the overall weighting in the portfolio until the next rebalancing date. So it's normal to see some of them go above 4%. There's definitely some balance in the sectors, 22% in financials, 20% in information technology, which is pretty high considering it's a dividend ETF, 13.93% in consumer staples, 13.6% in industrials, 12% in healthcare, Very good balance across multiple sectors. All right, let's talk performance for this ETF. This is monthly performance as of December 31st. One-year return is 29.87%. 3-year return is 23.9%. 5-year return, 16.77%. 10-year return, 15.34%, and since inception in October of 2011, 15.64%. These are total return numbers here. Let's talk dividend metrics here. We're gonna go over to Seeking Alpha's website because they've got a great way of presenting that information. Dividend yield, based on the trailing 12 months, is 2.75% for Schwab. Now we're looking at this dividend growth rate. This is why SCHD is so great. 3-year growth rate, 16%. 5-year growth rate, 12.32%, and it has a dividend streak, consecutive years of dividend growth, of 9 years. This is by far something that is superior with this ETF than you're going to see with other ETFs out there, such as DGRO, which we looked at, VYM, VIG, all these ones out there definitely have great capital appreciation, definitely have a quality with the dividend growth, but they just don't have a yield anywhere near SCHD given those metrics. You can also see here that this is a quarterly paying dividend ETF. Most recent dividend was 62 cents per share, and that was paid out in December of 2021. All right, it's time to get over to that spreadsheet. I know you guys have been waiting for that. What I wanted to do here was not necessarily represent SCHD against other dividend ETFs. We've already looked at that. We have confirmed that SCHD is just the best dividend ETF out there based on, of course, historical performance. Then again, though, we're not necessarily always concerned about historical performance. We want to see what is going to happen in the future as well, which is why we look at the underlying data for this ETF. What is the index comprised of? Is it quality underneath there, or did it just get lucky over the past 10 years? SCHD against 3 other market ETFs. We're going to look at SPY, the S&P 500. We're going to look at QQQ, which is the NASDAQ 100 from Invesco. And we're going to look at the Russell 2000 ETF from iShares, IWM. These are broad-based index ETFs. And I would say we would fully expect, generally, especially considering the bull run we've had over the past 10 years, we would fully expect that these index ETFs would outperform a dividend ETF. Dividend ETFs don't generally outperform in times of bull runs when you've got tech that's going crazy. We can see the breakdown here based on assets under management, holdings, price, and dividend yield. And what we're going to look at is we're going to look at 3 different scenarios along with a performance number based on total return. We're going to look at a strategy based on monthly contributions starting from $0 and reinvesting all dividends. We're going to look at a lump sum investment where we are not reinvesting dividends. In other words, we have a set amount of money and we are living off the dividends, not reinvesting. And then thirdly, a lump sum plus monthly contribution investment, meaning for some reason we have a lump sum investment that we have to start with, and we're making monthly contributions, and we're reinvesting dividends in this scenario. The assumptions we're going to make is we're starting with $100,000, and if applicable, we are making monthly contributions of $250 a month. Again, I say this in every video just because I don't want people to misunderstand. I don't expect you to have $100,000, nor do I expect that you have to be able to contribute $250 a month. If you're contributing $50 to $100 a month and that's all you can contribute, that's better than nothing, and you should be proud of yourself. These numbers that I'm using are just to make sure that we all can see the scale and the differences between the different ETFs and how they perform. The time frame we're looking at is from origination, October 20th, 2011 through January 11th, 2022. Let's take a look here at monthly contributions starting from $0. We'll look at dividend income as well as portfolio value. As you might expect, and just spoiler alert here, when it comes to dividend income, SCHD is going to win every single one of these strategies from a dividend income perspective. The yield is over twice the next highest level of dividend yield. But let's take a look at portfolio value. The lowest performer here was by far the Russell 2000. The total portfolio value would be $57,752.64 based on our assumptions. Schwab comes in 3rd place, but not by much, by a hair from SPY, which is worth just over maybe $1,500 more on the portfolio value. Neck and neck, Schwab, given their dividend ETF, was still able to keep pace with the S&P 500. And of course, I think we all knew this was going to happen as well. I mean, QQQ, the NASDAQ 100, heavily tech-based. We know that it's been on a significant bull run over the past 10 years, so it's no surprise that this tech ETF would outperform. But I want you to take a step back here, realize that the NASDAQ 100 has had its best 10 years, I think, maybe ever, except for leading up to the dot-com bubble. And for Schwab to perform as well as it did, given this crazy times, I still think is a notch in SCHD's cap. Let's take a look here at lump sum investment, no dividend reinvestment. This will be interesting to see. If all of the money is in the account on day one, how does this change the results? Last place again is the iShares Russell 2000 ETF at $310,000. We're starting with 100, and then just 10 years later, it's worth $310,000. Second place is the Schwab SCHD Dividend ETF at 328,000. Then we've got second place with the S&P 500 at 387,000. And as you might expect here, this is where QQQ really outperformed, worth $684,000. That 100,000 turns into 684, which is just insane when you think about that. That just speaks to that, again, that tech run over the past 10 years, which I do not think is representative of long-term investing, what you can expect to see. And given that over those 10 years, you would have received $56,000 in dividends, over half of your initial investment in dividends. And when you factor in this dividend income, you can see that SCHD almost outperforms SPY. All right, and lastly here, the lump sum investment plus monthly contributions. Again, we're still starting with that lump sum investment, so we can see that, the Russell 2000 is still the worst performer here at 367, followed by Schwab at 400. Then we've got 460 for the S&P 500 and 791 for the QQQ investment trust. And you'll see here that, these numbers don't tell the whole story. It's actually much closer until the most recent 2 years. Let me go down to the actual charts. All right, so this is the portfolio value based on monthly contributions from $0. And if we zoom in here, you'll notice that they're pretty much neck and neck. You can see that QQQ has jumped out here right around 2018, is up higher, but really the separation doesn't happen until after COVID. And then, QQQ has just gone on a tear. And there were times over here that Schwab's ETF was actually worth more than the S&P 500. And my apologies, guys, I didn't even include the legend here. So now you can see the different ones here. You've got yellow, which is the QQQ, black is the Russell 2000, red is the S&P 500, and blue is SCHD. All right, so this is lump sum only, not lump sum plus monthly contributions. Again, I want you to recognize here, they were still kind of neck and neck through right around 2016, even the QQQ, and then it finally did get some separation from 2016 through about 2018, and then again right around COVID, and then it just took off like crazy, whereas the others performed about the same here. There wasn't much separation between the S&P 500, SCHD, and the Russell 2000. All right, so this is lump sum plus monthly contributions. Again, that $100,000 up front plus monthly contributions of $250 a month. And again, just really magnifies the results we already had. We've got QQQ way up here. And notice again that we were still pretty close together along this way, despite the $100,000 initial investment, still very close together. And then the real breakaway doesn't happen until right around here in 2018, and then again right around COVID here 2020. The big takeaway that I want you guys to have here is not that SCHD underperformed the S&P 500 and the NASDAQ 100. You should expect that a little bit from an overall value. We own a dividend ETF, not because it's the highest performing and gives you the most total return, but because it gives you dividend income and it maintains its capital value. Remember that QYLD was one that didn't maintain its capital appreciation at all. It actually was losing money over time. We've got a strong balance here with SCHD between capital appreciation, between dividend yield, and between dividend growth rate. That dividend growth rate is the magic though. That is what makes SCHD so valuable. If its dividend growth rate in the future starts to dip down, you're gonna see the overall results of this fund, I think, go down as well. And I did it last time, and I apologize, but I wanna make sure that I actually reveal the total return here. This is cumulative total return performance. Over those 10-year period, just over 10 years, the Russell 2000 returned 236%. Then we've got Schwab at 284% over those 10 years, an average of about 28%. Then we've got SPY at 325%, and then that wickedly high number here from QQQ at 607%. Make sure to leave your 2 cents down in the comments below, guys. I really value your feedback, and I want to make sure that I'm making content you guys want to see more of. So make sure to leave your 2 cents down in the comments below. And that's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.